In this video, we'll go through just some financial reporting basics. I'll talk about the purpose of accounting on a very broad level. I'll talk about the financial reporting environment, and then I'll talk about public companies and what filing requirements they have. First, let me give you an overview of the idea behind accounting. Business entities engage in economic activities, right? They buy and sell inventory, and they pay their employees. They have many other costs and income streams. Well, those economic activities occur, and accountants need to turn those economic activities of the firm into useful information so that investors in the firm can understand the operating performance and financial position of the company, okay? So what accountants do is they take economic activities that the firm engages in. They take accounting rules, which are set by regulators. They also use some of their own judgments to implement the rules. And going through those two filters, it results in, hopefully, something that is useful information. And specifically, useful information comes in the form of financial statements and footnotes. And those are the pieces of information that we're going to learn about in this class. And what happens with that useful information? Well, it gets fed to investors and other members of the capital market. And hopefully what they do with that information is they make good decisions. And so in simple terms, the purpose of accounting is to organize the useful information so that it represents the economic activities of the firm, and it makes statements about the financial position of the firm and the operating performance. Now let's read some of the standards set by regulators. And I'm going to start right here. Financial reporting should provide information that is useful to present and potential investors and creditors and other users in making rational investment, credit, and similar decisions. And the most important word in that whole statement is useful. So the whole reason that we do accounting and financial reporting is to make useful information, so MBAs and other users of the financial statements can make good decisions. Financial accounting provides a mechanism for firms to communicate with outsiders. Okay, now let's bring this on a tangible level and talk about the financial reporting environment. And let's talk about it in the context of a specific firm, Palantir. And Palantir has some operations in Denver, so some of you might be aware of the company. Palantir pretty recently was a private company, meaning that it was just held. So it was owned by a small number of sophisticated investors. So you see those people over there? They own, at least they did when it was private, they own Palantir, okay? And they can make all of the decisions with respect to the operations of Palantir. And even in the absence of public securities laws, they demand useful information from Palantir, right? They wouldn't be willing to make this risky investment if Palantir wasn't providing them with useful information so that they could guarantee that the company was acting in their best interests, okay? So useful information actually will show up in an economy even in the absence of regulation. But now let's talk about the regulation. So Palantir went public very recently. So what happened is, rather than just being owned by a small number of very sophisticated and rich people, investors, Palantir went public. And now anybody's grandparents, anybody's children can invest in shares of Palantir, okay? So now shares in Palantir are being opened up to the broad market, okay? And when that happens, what the laws are based on is the idea that these unsophisticated investors have a more difficult time protecting themselves and demanding the types of useful information that result in good decisions. And so now we have some regulatory agencies stepping in between this relationship. And specifically, I'll talk about the Securities and Exchange Commission and the Public Company Accounting Oversight Board, the PCAOB. The Securities and Exchange Commission regulates the form and content of the useful information that public companies must provide to their investors. The PCAOB mandates a third party to audit this useful information. And so maybe you've heard of some of these auditing firms like PricewaterhouseCoopers or PwC, Deloitte & Touche, KPMG, Ernst & Young. These are the big four public accounting firms, and there are many others. So I'll just put PwC as an example of a company I used to work for that audits this useful information. And so the SEC dictates the form and content of that useful information, and the PCAOB requires an independent third party to audit that information to make sure that these unsophisticated investors can rely on it. So this is a slide laying it out. The SEC requires public companies to report financial information publicly, and the PCAOB requires public companies to have financial statements independently audited by a third party. And the final thing we'll talk about is the types of information that the SEC requires companies to disclose. Okay, so first of all, the SEC requires companies to follow accounting rules. Okay, the SEC dictates this. When you give financial statements and footnotes to investors, they must follow financial accounting rules set by the FASB, the Financial Accounting and Standards Board. And so the SEC delegates authority to the FASB to set these financial accounting rules. Okay, now how are investors going to receive this information? Well, the SEC requires filings. So when you're a public company, that is when you have a lot of unsophisticated investors investing in your company, the SEC mandates certain information to be given to these investors. And here's just a listing of some of the main filings that public companies have to make on the SEC's website. Okay, so we're going to be able to find all of these filings on the SEC's website. First, when a company first goes public, they file registration statements. And registration statements are just intended to give investors a feeling of what they're investing in, okay? What is the current operating performance and financial position of the company you're investing in, and what are the future plans of this company, okay? Is this a safe investment or a risky investment? That's the purpose of the registration statement. Then once a company is public, every quarter they have to file quarterly financial statements. And this will be all the financial statements that we'll get used to: the income statement, the balance sheet, the statement of cash flows, and all of the associated footnotes. Those have to be filed on a quarterly basis, which is every 3 months. And then every year, so in the fourth quarter of every year, companies are required to file their annual financial statements, including something called the Management Discussion and Analysis, the MD&A. And that's for US-based companies, that'll be on Form 10-K, whereas the quarterly is the Form 10-Q. Annual statements are on Form 10-K. If it's a foreign filer, it'll be on Form 20-F. And if it's a Canadian filer, it'll be on Form 40-F, okay? And these annual financial statements, again, they're filed once a year, typically on a Form 10-K for domestic companies, and they'll just contain the entire year on an income statement, the year-end balance sheet, and all of the associated footnotes below the financial statements. The MD&A, or Management Discussion and Analysis, is a subjective discussion from management explaining their performance and financial position to investors in a subjective way. Okay, that's the MD&A. And that usually appears above or before the financial statements in Form 10-K. Sometimes material unscheduled events occur. Okay, a company goes bankrupt. A company engages in a major transaction. Okay, a company decides that they're going to lay off some of their employees and restructure. Okay, lots of different material unscheduled events occur during the year, and investors need to be made aware of these events immediately. And so when an unscheduled event happens, a company will file an 8-K to make investors aware of it. If it's a foreign company, you'll see the form called 6-K. And then every year, public companies are required to have shareholder meetings where shareholders vote on key issues. Is our executive compensation fair and appropriate? Should we engage in certain merger activities? Are we being responsible in terms of the environment and our employees? And so shareholders vote on key certain matters, and information about those matters is disclosed in these shareholder meeting materials called proxy statements, and those are the form names. So DEF 14A is the typical one for an annual meeting, DEF 14A. Some of these other ones are having to do with mergers and situations where shareholders don't necessarily have a say, but they are still present for a meeting, okay? Finally, when insider trades occur, so if the CEO or CFO or certain key executives are making trades in the company's stock, Investors need to be made aware of that. Okay, you're interested in that, right? If the CEO is selling all of his or her stock, you want to be made aware of that situation. Or if they're buying stock, you want to be made aware of that. So insider trades are publicly disclosed as well, and that's typically on a Form 4. Okay, so those are all the filing requirements. You'll find all these filings on the SEC's website, and public companies are required to make these filings so that unsophisticated investors receive the important, useful information that they use to make their decisions.